The Jay Garvin Show. Home Mortgage Talk. Saturdays 8 a.m. and Sundays 10 a.m. on KRDO News Radio 105.5 FM at 1240 a.m. And now here's your host, Jay Garvins.
Well, good morning. I am Jay Garvins, and you're listening to The Jay Garvin Show, Home Mortgage Talk. I appreciate you. We are full into spring. This week we finally got some rain. I appreciate you tuning in this morning, and you are listening to Home Mortgage Talk, The Jay Garvin Show, Southern Colorado's Home Mortgage Jedi, where all the information, all your questions are answered, and an open discussion, and we have a full day. Really, to let you know right now, the name of today's show is Mortgage Loans. How do you know what you need? So mortgage loans, how do you know what you need? That's going to be our discussion today. But you, my friend, my listener, you know I always start the top of my show with housekeeping and what's going on in Colorado Springs, Pueblo, Brush, Southern Colorado as a whole. And I think probably the biggest news this week is Santorum. Mr. Santorum has suspended his campaign. He did that midweek, so we are down to a political battle, as you might say. Quite obviously, I think, unless there's some type of apocalyptic action that takes place at these national conventions, a battle between Mitt Romney and our own President Obama. I'm telling you. Boy, I could talk for hours about the fiscal condition of our country. And this is not a political show, so I'm not going to get into it. But what I am going to tell you right now is you better, Republican, Democrat, Independent, better look very strongly at these candidates fiscally. I don't give a rip what your religious beliefs are with right to life and all of that. I've got very strong feelings, but without a country, with our country in bankruptcy, that discussion is moot. I don't care about some of the politically incorrect issues like Santorum picked up, like pornography on the internet and stuff like that, what your feelings are about that. I really don't care. Because if we don't have a fiscal foundation in this country to operate off, we can't even have that debate. I don't care what my outlook or anybody else's outlook is on health care. If our country's bankrupt, we can't have that discussion. I mean, can Portugal or Greece have that discussion? They are in a state of fiscal destruction. So I want you to do your math. I want you to lay Romney next to Obama. Look at these guys fiscally. Who's run a company? Do your math on that. One of them, I'm not even going to get into it. Do your research. One of them ran a state as a governor. What did the other one do? You got to really look fiscally. I will tell you a fact of the matter in history is our current president is the first president in the history of the United States to be in office when our debt status as a country was downgraded. Both George Bush and Obama have put hundreds of billions of dollars towards stimulus, but most importantly, we are bailing out Fannie and Freddie to the tune of hundreds of billions of dollars. They wanted to get and fleece, tar and feather George H. Bush for his $5 to $8 billion bailout of the savings and loan. Remember that back in the early 90s? That is a joke. We bailed out Fannie just for $16 billion this last quarter. I mean, do the math. We are at hundreds of billions of dollars. We will probably reach $1 trillion in bailing out these companies before we are done. I believe they will be closed up. I get real passionate about this. But the bottom line is I want to get off the subject. Do your math. Do your research. This is a huge election coming up. I think it's huge, enormous news this week that Rick Santorum pulled himself out of the campaign for whatever reason. It doesn't matter. He's not there. Battle lines are drawn, and this is going to be one of the most historic elections in the history of our country. I think it's going to come down to like Bush and Gore, where it came down to Florida with hanging chads and all of that stuff. We're going to have something. I don't know if it'll be a hanging chad, but it might just be somebody hanging. So that's that news for the day. Also, Spring break is over. It is raining. Other news that we have here locally is a segue into the show. This last Monday on the 9th, FHA changed some of its major fees. That's going to be one of the biggest discussions I go into in mortgage loans. What do you know? How do you know what you need? Mortgage loans, how do you know what you need? That's what I'm going to be talking about today, whether it's a purchase or a refinance. Let's really get into this. I mean, Donnie Corum, one of my better friends, he runs Synergy Real Estate. Definitely someone that I partner with in this show because Donnie helps all individuals find a deal rather than a house. That's why it is important to get a hold of him. If you need a real estate agent, if you want to go through a great internet search for a foreclosure, I will tell you searchspringshomes.com is a great place to go find Donnie. But if you need a real estate agent and you need to get together with someone who is going to give you an amazing deal, call me and I'll get you personally in touch with Donnie. I did that with 2 clients this week. But if you are purchasing a home, how do you know what you need as far as a product? Also, if you're refinancing, all you know is you need a lower rate. How in the world do you know what you need? When you go out and purchase a house, all you want is a nice house. But in order to get to that goal, you have to get financing. And oddly enough, over the last 5 years, since 2007, in the ultimate collapse of the subprime and then the primary mortgage markets, people are finding it's more difficult to look at the pretty house because they can't get the money. So that's why we're talking about it today. I'm going to break this down into very easy layman's terms. There really is basically 4 or 5 categories of loans. Some of the most obvious, the most popular is conventional, and I will go into what that means. You also have the category of government loans. That's a very large category. You have non-conforming loans. Most of you know this as like the most popular product within the non-conforming realm is a jumbo loan or one larger than $417,000. Why do we choose that dollar amount? Because that is the maximum amount in most counties throughout the United States that a jumbo maxes out at a $417,000 loan. That is not the case like in Aspen, Colorado, or San Francisco, California, or Hawaii, or Alaska. So there's variations from that, but I'm going to talk to you, the listener here that lives in Colorado, southern Colorado, Colorado Springs, Brush, Trinidad, Alamosa, Pueblo, Fountain, Security, Monument, Castle Rock, all of my listeners from all over. I really appreciate you. Every single time you have a question, you can call me personally. As you know, if you're a brand new listener, welcome. My name is Jay, and I'm your friend. John Maxwell says that. And you can call me personally at 719-330-1457. I do not delegate out to telemarketers or employees. I will talk and listen to you personally. You are very, very important to me. If I only do one thing in my day and my week, it would be talk to you, my listeners, mortgage individuals, get them pushed in the right direction. I am the owner of Colorado Springs Home Mortgage Loans. Have been for years. Have been in the industry since 1998. Since then, my best friend and best man in my wedding, Jeff Wolf, now deceased, passed away, introduced me to mortgage at the time. And I transitioned from being a military pilot, a helicopter pilot of Blackhawks, to mortgages. So I went from flying an aircraft to flying a desk. Bada boom. But that's my history. So you can get a hold of me. Also, a very, very easy way to get a hold of me, which more of you have been doing and I prefer, is just go to ColoradoSpringsHomeMortgageLoans.com. ColoradoSpringsHomeMortgageLoans.com. I don't care. Google Jay Garvins, Garvens, and you can get to our website, fill out the information on the upper right-hand part of the page, put in your questions, put in the information, additional comments, and click that to me, and I will call or email you. Just tell me how you would like to be contacted. But telling you, going through the conventional, government, non-conforming, with the most popular part of non-conforming, jumbo. And then the last one really is portfolio loans. Now, we could get into more categories, but portfolio loans include anything from investment property owners. If you have a 5th, 6th, 7th, 8th, 9th, up to 10 properties, you're not going to be able to get a government loan. Now, you can argue that you could get a non-conforming, so these categories of portfolio and non-conforming are interchangeable, but for reasons of simplicity, I'm just going to explain to you. One of the portfolio products is if you want to own investment properties, 5 through 10 properties, you're going to have to go through a portfolio lender and not a conventional or government loan program. Also in portfolio is you have like vacant land loans that also could be a non-conforming, but most non-conforming in subprime are going away. You also have a construction to permanent loans. These are some of them. So talking about the basics and the general definition of the products, let's go back now and really start to touch on some of them. Let's start with conventional. I want to let you know that 60, as much as 80% of all of the loans going into the mortgage fiasco in 2007 was really conventional and non-conforming. Government really, FHA a little bit, but VA were not used at all, because you could go and get a non-conforming 80-20 no money down loan and buy a house, no problem. You didn't need conventional. I'm talking to a lot of you right now about what in the world do you do because you've got a loan that you purchased a house with in 2006, no money down. You got an 80% first at interest only. It's some redunculous like 3-4%, but you're not paying down any principal, and now your house value's upside down. And then you've got a second mortgage that literally is like at 8 to 14%, and you can't get rid of these products. What do? Well, you call me, 330-1457, 330-1457, and we creatively go through it. Now, if you got a trailer, you got a mobile home, or you can't pay your bills, or your FICO score's like 400, don't call me and expect me to be the savior and fix things. I can't fix your bad habits of paying your bills. If you can't pay your bills, I can't convert your mortgage. But if you've got good credit, or you're a good person who's been in a bad situation and you need help fixing your credit, then give me a call. If you're a bad person, just saying one more story, save your breath. Call somebody else. Don't call me. We can weed each other out with no time at all. I do want to tell you that the conventional loans were the most popular. I'm going to be going into the details straight ahead. Don't go anywhere. I am going to share with you some of the most impactful information that's coming out with government loans, specifically FHA. It will stop you in your seat. You'll screech. You'll skid. You're going to run people off the road, so prepare for it right now. Limber up your neck. Limber up your mind. I'm going to hit you with some change in fees in FHA mortgage that'll blow you away. We're talking hundreds of dollars a month to thousands. Don't go anywhere. Straight ahead, we're going to go into the details. You're listening to Jay Garvin's KRDO News Radio, The Jay Garvin Show, Home Mortgage Talk. We'll be back after the break.
The Jay Garvin Show, Home Mortgage Talk, Saturdays 8 a.m. and Sundays 10 a.m. on KRDO News Radio, 105.5 FM at 1240 a.m. And now here's your host, Jay Garvins.
Welcome back. You are listening to The Jay Garvin Show. I am Jay. This is Home Mortgage Talk here on KRDO News Radio. And before the break, I was talking way too fast, getting way too excited. We are talking about mortgage loans. How do you know what you need? We talked about the differences of purchasing a home and refinancing. The biggest thing here is if you're purchasing a house, you just want to get your darn house. But if you've got a good real estate agent, they are going to tell you, hey, go get a pre-qualification letter. And how do you know what you need? Basically, what that means is with this market, nobody is guaranteed money. I just finished up with Lauren and Greg, a very wonderful couple and customer of mine. And they have a tremendous financial portfolio. They're not in trouble by any means. They have enough income for sure. And we had a really tough time completing their loan, even with incredible income that they had. It's amazing. People can have perfect FICOs. They can have a 7-figure income, and it's still difficult getting the loan. One, documenting taxes and details, but also the properties. Their issue was the property. You start to get townhomes. I'm going to talk about townhomes, mobile homes, manufactured homes. You start to get into those, and those are really tough structures to get loans for because so many of them have went into foreclosure and so many of them went into short sale and default. That's very, very important in what you buy and how do you know what you need. But with a purchase, the first thing you need is you need a pre-qualification letter. If you are out there looking at a home for the very first time, please give me a call. I will personally help you with a pre-qualification letter. That's just a review briefly over the phone of your credit and your income, and it kind of tells you what dollar amount you qualify for and what interest rate based on your credit and income portfolio. But also I want to let you know that if you're just refinancing, you can give me a call as well. And I've been sharing with people, if you are higher than 4.75% on a government loan, you absolutely want to give me a call immediately. And that's 330-1457, 330-1457. If you are higher than 5.5% on a conventional loan, give me a call or go to my website, Colorado Springs HomeMortgageLoans.com. Colorado Springs Home Mortgage Loans, that's plural.com. You know you're at the right place if you see Colorado Springs HomeMortgageLoans.com. You also will see a video of me, Jay Garvins. You'll see reference to the Jay Garvins Show. That's how you know you'll be at the right spot. Fill in that information on the right-hand side. Click send, and I will personally get a hold of you. And if you have an investment property that is above 5.75%, give me a call. We can restructure, and that's how you know what you need is having a discussion with a mortgage broker, and that is me. I am the owner of Colorado Springs Home Mortgage Loans, and I will help you. Going into more of the conventional government, non-conforming, and portfolio products, I told you, first of all, in a purchase, all you're going to want is a house, but that pre-qualification letter is the first step for you to get this job done. Then you're going to go through a loan application process, but let me go through some of the products here for you. And without any delay at all, as soon as we get into government, I am going to tell you some of the most earth-shattering news about FHA and whether you are with the broker right now. So if you are in a FHA streamline refinance process right now, you are going to want to stick around because your mortgage broker or banker, as of this Monday, if they did not lock in your rate and have an FHA case number by last week, you should not be starting an FHA Streamline this week. And if you are, stop. I will teach you how to interview your mortgage broker or fire them and call me, because I'm going to explain exactly why after the 9th of June, things are dramatically going to get better for you. But going back to the conventional government, non-conforming, and portfolio, let's go from the least likely and then spend the most time with the most popular at the end. The portfolio loans. First of all, if individuals have told you that you can only have 4 properties, investment properties in this country, and you can't own any more unless you go into hard money, private money, all of that. That is an untruth. They're not educated or they are ignorant. You give me a call at 330-1457, 330-1457, and I have portfolio products that you can get a 5th, 6th, 7th, 8th, 9th, and 10th house at a very, very competitive rate. We're still, with investment properties, going to be in the low 5%. And you have options to put 20, 25% down, equity, stuff like that. That is up to you. The bottom line is that we can help you. I can personally help you, and I want you to give me a call. Other things like portfolios, if you're going to do a construction to permanent, you have a plot of land and you want to build a brand new house with a boutique builder, give me a call. We can give you that money. We have those niche investors out there. But let's go into non-conforming. Vacant land loans and stuff like that last in portfolios. You really want to go to your local bank. If you have a modular or a mobile home, you really want to go to your local bank. You can call me and I can get you in hold with some of the larger banks like Bank of America or Wells Fargo. If you have a mobile or a modular, those are your best bets for years. From 2008 to 2011, there were really no products. But now they've got those mortgage lines open again, and you can get help there. Vacant land loans, stuff like that. You always want to go to a local bank because people at the international or the national scope in other states, they're not going to know the value of vacant land in Alamosa, Brush, Colorado Springs, or Fountain Security. But the big thing here now, jumbo, non-conforming. This is one that's absolutely crazy. I've not got the word out enough on this. If you are at a 4.5% or higher on a jumbo loan, you absolutely want to give me a call. 330-1457, 330-1457, or go to Colorado Springs HomeMortgageLoans.com and fill out information, because I just helped a wonderful gentleman, a firefighter, this last week, and I miscalculated. We've been so busy that he ended up going to Wells Fargo and getting a 4.5% on a 30-year fixed jumbo. If you're in a variable, in an ARM, in a 5-year, in a 3-year, in a 7-year ARM, and a jumbo, you absolutely want to give me a call. You've got to get out of that ARM. We are going to hit an inflationary hedge that will be like a bat upside the side of your head. I mean, it's going to be crazy. Your jumbo loans are going to adjust up to 6, 7, 8, 9% if you don't get them into fixed products right now. And I can get you as low as 3.75 or 3.875 on a 30-year fixed jumbo product. That means that you are going to be $417,000 in loan balance or more. That's what constitutes a jumbo. We go all the way up to several million. If you are refinancing, we can help you with equity positions. I have several investors that are phenomenal on jumbos, and that's probably the most popular remaining non-conforming product right now. Everything like these 80-20 purchases are gone. Anything like these option arms are totally gone. It's what got us into trouble. There are very few people like to tell you, oh, you know, I have a person that I got in the perfect scenario for an option arm. You know, I think that is crap. The bottom line is that in an option arm and non-conforming, before they went away, you had the option to pay a 30-year amortized payment every month, a 15-year amortized payment every month, an interest-only payment every month, or what's called a negative amortization every month. And you can imagine what most people paid. They paid the negative amortization, and very few of those products are fixed. But if you're in an option arm, you want to give me a call. There may not be something we can do for you, but I'm helping individuals that have had VA eligibility, transferring them over into FHA loans. I really don't get into the DU Refi Plus and the HARP, the Home Affordability Refinance programs, too much. I can't pretend that that's my niche. But if you are a veteran and if you've got VA eligibility under any circumstance, whether it's a refinance, whether it is a purchase, whether it's to check your certificate of eligibility, whatever it is, you give me a call. That is absolutely my passion. That is my company's passion. Every single person at Colorado Springs Home Mortgage Loans who is originating loans, we have all served in the military, are all veterans. You don't have to be a veteran to come here, but that is one of our niches. Also, if you're a new first-time home buyer, you absolutely want to give us a call. And if you are getting into an FHA or you already are in an FHA government loan product, you absolutely want to give me a call. And that's what we're going to get into now, the meat. If you have a government loan and you have a conventional loan, conventional loans are pretty straightforward. You have private mortgage insurance on those products for anything above 80% of the loan to value. We call it the LTV. So if your house is worth $100,000 and you have a loan balance above $80,000 on a conventional product, the government requires you to have what's called PMI, which is private mortgage insurance. So all of these acronyms and stuff might not mean much to you, but the bottom line is, just like you have insurance on your car, if you have less than 20% equity on your house, think of it as you need insurance protecting you and the bank, more specifically, or the investor holding your mortgage, against foreclosure. So if you have a balance that is less than 20% equity, you need to have private mortgage insurance. And private mortgage insurance protects that investor against your potential of going into foreclosure. So what is PMI? PMI is all different rates. The bottom line is for about a $100 house, it's going to be about anywhere, depending on your credit rating, $80 to $120 a month. And when we get into FHA, I'm really going to talk about that in detail. But the bottom line is that you need to have private mortgage insurance. If you have 20% equity or more, there is really no need to utilize any of the government products, either the FHA or the VA, through eligibility. You want to remember that every government loan, with some small exceptions for VA and individuals that have disability, have different funding fees. They have different mortgage insurance premiums up front and monthly, and there's always a fee. The cleanest, most unfettered product out there is a conventional loan with 20% equity or more in your house or structure. So if you have 20% equity or more, a very aggressive conventional interest rate right now is about 4% even. That means you are going to pay some origination to get that, but you can get a great 4% on a 30-year fixed with no junk fees, and you can get a great product and give only 4% to the investor. Another thing is great about the conventional products is you have the ability, more flexibility and competitiveness to put them into 30-year amortization notes to 15-year amortization notes. You can go into 10-year amortization notes. You have a lot of options with the conventional product. And if you're in that product, and like I told you before, you are above 5% to 5.25%, you absolutely want to give me a call at 330-1457, and we will get you into that product. But now, here is the big news. The big news. You've been all waiting for the government products. I'm going to talk a little bit about VA, but first I'm going to jump right into the FHA. They keep changing the different fees, structures, guidelines around all of these products. And before April 9th, this last Monday, these were some of the informational guidelines for FHA. Number one, you have to, when you get an FHA loan, put 3.5% down. That used to be 3%. Now they're requiring 3.5% down. So that's a good thing. If you're buying a $100,000 house, you're putting down $3,500. If you're buying a $200,000 house, you're putting down $7,000. That's relatively small amount for a down payment on a purchase. Now, the difference is you also have upfront mortgage insurance premium. Right now, that's at 1% up through this last Monday. And this last Monday, when you buy a house, you no longer put your 3.5% down and then your 1% mortgage insurance premium to the HUD FHA administration. You're now putting 1.75%. So instead of paying them $1,000 up front, as of this last Monday, on purchases and streamlines, when you're refinancing or purchasing, you're putting down $1,750. That's a really big increase. That is significant. Not double, but pretty close. And then once you give that upfront product and that upfront payment, you need to pay a monthly mortgage insurance premium. It used to be 1.15%, which means on every $100,000, you would give them $1,150 a year. We'll divide it out. That's about $95 a month. And straight ahead, I'm going to explain to you why there is huge advantages on an FHA Streamline coming the 9th of June, and why you need to call me, have your current broker or banker put you on hold, and get that process looked at. Stay tuned. Right after the break, we're going to go into the details. You're listening to Jay Garvin's KRDO News Radio, The Jay Garvin Show.
The Jay Garvin Show. Home Mortgage Talk. Saturdays 8 a.m. and Sundays 10 a.m. on KRDO News Radio 105.5 FM and 1240 a.m. And now here's your host, Jay Garvins.
I'm Jay Garvins. You're listening to the Jay Garvin Show. Home Mortgage Talk. I'm doing my best to stay into the meat of the issues, and we were talking about FHA mortgages before the break, and the fact that all government programs have changes. When I was in the military as an officer and a pilot, I think that's what prepared me for mortgage, because there's a lot of nonsense and paperwork. Majority of our competitors have went out of business because it's just brain damage dealing with it. But I promise you, I will put it into layman's terms for you. If you have any connection or any of these discussions relates to you, stop. Call me right away. 330-1457. I don't even care. Many of you, the listeners, have actually put it in your phone right now. 719-330-1457. Just dial it. I don't care if you hang up on me. You just save it as Jay, your finance guy, and you can call me back later. But you also can go to Colorado Springs HomeMortgageLoans.com. Colorado Springs HomeMortgageLoans.com. That's loans, plural. And you can Google me, Jay Garvins, as well, Garvens, and go to my website. I'm the owner of Colorado Springs Home Mortgage Loans. Enter in any questions that you have as this subject matter relates to you, and click send, and I'll call you personally. But previously, the upfront mortgage insurance premium was 1.15%, like I mentioned before the break. So if you have a $100,000 home, that's about $1,150 a year you have to give the FHA to kind of insure your product. The advantage of this product is that you get more of a loan. You have to put less money down, only 3.5% instead of a conventional where you're putting 5, 10, 15, 20% down to avoid private mortgage insurance. But now this monthly private mortgage insurance premium went up from 1.15 to 1.2, or effectively 1.30 based on your credit score. So what that means is if you have a $200,000 home, you are going to pay before this last Monday like $2,300 a year, or about $190 a month in mortgage insurance premium. Now, as of this last Monday, the 9th of April, the Monday after Easter, that went up to 1.3% effectively, which means you're not paying $95 a month. You're paying about $108 a month for every $100,000 alone. So if you have an actual mortgage of $200,000, that means you're going to have about $216 a month of mortgage insurance premium. I mean, that is a big chunk of a payment. Well, you also have the upfront. The upfront fee went from 1%, or $1,000 if you have a $100,000 mortgage, up to 1.75%, or $1,750. But here is the deal. Here's the showstopper. Here's where you pull over. Don't go into the store yet. Listen to this. This is the whole meat of the entire show. And the fact of the matter is that as of 9 June, if you have an FHA mortgage and you want to do a streamline, your MIP, both upfront and monthly, get dramatically reduced. So I'm going to go into the details of it, but here is the gist of it. I'm going to say it like 10 times in the next two segments here before the show is over. If you are initiating an FHA streamline right now, stop. You need to call me, and I'll explain to you how you can save thousands of dollars a month if you just hold off until after the 9th of June and get your FHA case number then. Now, here's a little test. I had someone call me this week that said, hey, I was in the middle of an FHA streamline, and they told me I was going to have like $3,850 up front in fees. The 1.75%. They had just issued the case number this week. And he said, I was not comfortable with it, and I asked the mortgage banker to explain this, and they said, hey, there's nothing to explain. It's a requirement by the federal government, and we have no control over it. That is a lie. If you are doing an FHA refinance right now and you have a $200,000 mortgage, you are going to have to pay $3,500 just to fund that loan. But as of 9 June, your upfront mortgage insurance premium is going to go from like $3,500 down to $200, effectively zero. Your mortgage or broker or mortgage banker, if they're bringing you through the loan refinance process for an FHA streamline right now and not intentionally positioning you to prepare and get a case number after the 9th of June, because here is the difference. I told you, the upfront mortgage insurance premium before this last Monday was $1,000 up front in your purchase or refinance to the HUD administration for their troubles. As of this last Monday, the Monday after Easter, it went up to 1.75%, which means every $100,000 you now have to give them $1,750 up front. That's forever for a purchase. You can't stop or delay a purchase, and that's not going to change after 9 June. But if you have an FHA mortgage and you're doing a streamline, that effectively after the 9th of June goes down to $100. So for every $100,000 of mortgage, you are going to be saving $900 for waiting. And here's the point. I'm not telling you to go run to your broker and coach him on this. If your broker doesn't have enough integrity, if your banker does not have enough integrity, you give me a call. I will review this after the break. You're listening to the Jay Garvin Show, Home Mortgage Talk, KRDO News Radio.
The Jay Garvin Show. Home Mortgage Talk. Saturdays 8 a.m. and Sundays 10 a.m. on KRDO News Radio 105.5 FM and 1240 a.m. And now here's your host, Jay Garvins.
Middle of April, we are in the last segment of the Jay Garvin Show, Home Mortgage Talk. You're listening to Jay Garvins, the host. I am the owner of Colorado Springs Home Mortgage Loans. I am your friend. I'm just teaching you a little bit of information here about mortgage. I am not smarter than you. I'm not better than you. I've just studied this junk for 13 years. I tell people after I was in the military for more than a decade as a pilot, if I couldn't explain how an aircraft worked by simply studying the manual, then I should get out of the Army and stop flying Blackhawks. The same thing with mortgage. If I can't tell you every single thing to know about mortgages after being in the industry for 13 years, call me an idiot. I should get out and call my wife and tell her that I am starting a new career. So, and whatever you do, if you've been doing it for 10 years, if you read the book, The Slight Edge, it talks about anybody who's got about 10,000 hours of experience in their industry, they should have a slight edge. And that's just what I have. I've just been doing it for a long time. I am constantly surprised at how quickly and how often people switch careers. I've only had 2 careers in my entire life. First the Army and now mortgage. You technically could put in a third because I did successfully and very proudly build an Amway distribution business with my wife from like 2000 to 2010. Work personally with some of the brightest and most entrepreneurial people right here in Colorado Springs. But for the most part, it's been my military career as an officer and a pilot and my career as a mortgage broker, and first as an employee this last 7 years as a business owner. But we're talking about FHA mortgages. We're talking about your broker, your banker that you're working with. And we're talking about a very, very, very unique situation. I'm going to be talking live this next week on KRDO lunch hour break about this, the changes in the FHA regulations. The bottom line is this, is you are going to save thousands of dollars by starting your FHA streamlined transaction after the 9th of June. That is because, for some reason, the government is waited and stalled in enacting a dramatically reduced fee structure for FHA streamlines. So if you're going through an FHA streamline right now, you want to stop. And here's the thing. Don't coach your broker or banker. I mean, if they can't come to you with integrity and your mortgage broker or banker has not come to you and said, hey, I know you want to do an FHA mortgage, but this is why I am going to prepare, build a friendship, create an application for you, but not submit it and do it until after the 9th of June, because the fees are going to be reduced from 1.75% upfront fee all the way down to 0.1. So that's like $1,750 down to $100. So that's $1,650 right there saved. And, oh, by the way, if you originate a loan right now with an FHA streamline because your mortgage broker or banker say, oh, you better do it because the interest rates, you don't know what they're going to be in June, the sky is falling, Chicken Little crap story, your monthly MIP is going to go from like $108 a month all the way down to $45. So you're not only going to save $1,650 a month up front, but every single month you're going to have a stinger of over $60 or another $680, $720 a year. So I don't say give your mortgage broker or banker another chance. I say the maximum that you would do is tell them, hey, haven't the fee structures changed for FHA streamlines? Tell me about them. And then give them an in. Now, if they look at you like a deer in a headlight and they're confused, pat them on the back, give them a mint chocolate, and get the heck out of there. Fire them. Because most individuals, especially at banks, don't have enough experience to know what the heck's going on. And I don't explain or try to be an expert of all. I got a production manager that explains this to me, pulls me aside. Scott Eskridge is the one that did the research and information for this show. I'm the owner of the company, and I'm an idiot because I'm in my mid-40s even before I'm learning delegation, but it doesn't matter how you get the information, just get the information. And if your mortgage broker or banker, because you love him, because he's a friend, a family, or whatever, coach and prod him, ask them to do their research, and then if they tell you, oh, yeah, that's a good idea, let's wait, that's one thing. But if you've got an idiot out there who's telling that you got to do an FHA streamline because the interest rates are good and blah, 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 blah right now, get rid of them, fire them, throw them off the cliff, put them behind the barn, give them a pillow party, whatever you need to do, get rid of them, because here's a guy that's doing the mortgage just to make his mortgage payment himself or his rental payment. You can tune into a previous show, and there's a shocker there. Why don't you just ask your mortgage broker or banker whether they actually own their house? That's a start. I mean, getting your mortgage completed by someone who doesn't own a house is like getting counseled by your pastor that's not married when you're in there for marriage counseling. If nobody can have and understand a mortgage and be responsible for one themselves, how can they help you? The same thing as well. Here is the show. Here's the coming out. Here's the 6-shooter. Both barrels drawn. If your mortgage broker and banker is not telling you about these FHA changes, why would you stay with them? If they're misleading you, it doesn't matter why. Whether they're naive, uninformed, misleading, whatever, get rid of them. If they don't come straightforward with you. But you can call me, anybody with an FHA streamline right now. This is my last plea of the show. You call me at 330-1457. Why? I'll help you personally. I'm not going to delegate out, and I'm going to help you. If you're starting an FHA streamline process right now, call me. We're going to get you situated for the first part of June. We're going to save you thousands of dollars regardless of the interest rate. And you know you can trust me, Jay Garvins. Go to my website, ColoradoSpringsHomeMortgageLoans.com, fill out the information, and have a great week. I appreciate you as a listener, every single one of you I connect. Jay Garvins, I'll talk to you next week.